Hello and welcome to Unacademy IAS. Welcome to a session where we are going to cover 25 MCQs from two most important documents for the upcoming preliminary examination, budget and economic survey. Before I start, here is a very important announcement. The best way to understand whether your preparation is up to the UPSC standards or not is to appear for test series. The Unacademy IAS All India Prelims Test Series 2026 right now is available at just 1 rupee. Use this particular QR code, scan it, enroll into the test series by paying just 1 rupee and get access to more than 30 tests. Evaluate yourself before UPSC will evaluate you. Let me begin the discussion. Question number 1, and before I start, please pause the video whenever the question appears, solve it on yourself or by yourself, and then listen to the discussion. Compare whether your assessment of the statements is the same as the correct assessment. Question number 1. Which of the following are the factors contributing to higher cost of capital in India? These are the four factors. Choose the correct option. Now, what do I mean by higher cost of capital? The average rate of interest. Economic survey document simply states that the high cost of capital is one of the reasons why the private sector investment in India has been lagging behind. Very often in the newspaper, you'll come across a statement given by the finance minister, Minister for Industries, where they're asking the private sector to increase their investment. And they're basically upset with the private sector that government, despite taking multiple reforms such as GST 2.0, private sector capex has not been increasing at the expected level. What is the prominent reason behind this? It is the rate of interest, that is the cost of capital. According to the survey data, for instance, the past 3 decades, that is between 1995 to 2025, the weighted average long-term interest rates in India has been 7.6%. When you compare this with other countries, it is much higher. And because the rate of interest on the borrowings is higher, it will in turn have an impact on the private sector capital investments in the domestic market. But what are the reasons why the rate of interest is remaining higher? One is the corporate bond market has not very well developed in India. Second one is the number of institutional investors compared to developed economies in India is lagging behind. There is also premium that is associated with the sovereign risk. And finally, the investments in the form of capital account which will flow into India, there are certain restrictions that is under the BOP. Capital account is there. In the capital account, there is still even today, we follow a concept of the partial account convertibility. So there are certain restrictions. So all these four factors contribute to higher cost of capital in India. Question number 2. Consider the following statements regarding nudge. It stands for non-intrusive usage of data to guide and enable. The tax department under this will conduct tax rates and searches in case of tax evasion. The nudge theory is one of the very important theories in the context of, let's say, behavioral economics. The income tax department in recent times has adopted the concept of a nudge. Nudge basically stands for non-intrusive usage of data to guide and enable. What does it actually mean? Under this, the tax department will not conduct searches. That's not the main objective. They will not conduct raids. The process that they're following is non-intrusive. That is, the income tax department will send you a message. They will send you emails asking you to check the filing of the returns that you have done, the disclosure of the information that you have done in the tax documents, etc. And what is the use of it? What is the use of this? By providing this kind of, let's say, nudge, that is a push. The tax department is pushing you to do the right thing. Income tax department, in fact, has stated that by following this kind of approach, they have seen that more and more income taxpayers are visiting the tax portal. They are revising, they are updating, providing the right information. So statement 1, it stands for non-intrusive usage of data to guide and enable. Yes. The tax department under this will conduct tax rates and searches. No. Right option for the question will be option A. Question number 3 now. Pause the video, solve it. Consider the following statements. The rationalization of subsidies has played a key role in creating fiscal space in India despite a large share of committed revenue expenditure. The decline in the subsidy expenditure as a percentage of GDP has been achieved partly due to improved efficiency through DBT. The expansion in beneficiary coverage under DBT has led to increased fiscal leakages. Straightforward, please look at statement 3. Increased coverage of the beneficiaries under the DBT, which has come into force for more than a decade now. More than 300 schemes are covered under this. With the expansion of DBT coverage, leakages have not increased. In fact, it has helped in reducing the leakages. Statement 3 is incorrect. But what is the reason behind this kind of a question? The economic survey has given data associated with implementation of DBT. The government of India has brought in more than 300 schemes which are in the form of cash-based incentive scheme or cash-based subsidies and non-cash-based or benefit-based subsidy schemes. More than 300 of them are under the DBT today. As a result of this, we have been able to save the amount of expenditure that would have been a much higher outgo if DBT was not implemented. This has been done despite the government having very high amount of committed revenue expenditure. What is the meaning of a committed revenue expenditure? I'll take one example. If you look at the total expenditure incurred by the government, of course I'm talking about union government here. Total expenditure incurred, one most important component is interest payment. And if you look at the data for the government of India, around 20% of the revenue expenditure will be in the form of interest payment. So government of India has committed expenditures which they cannot reduce, which they cannot deny in the form of defense, in the form of interest, salaries, etc. Despite having all of it, because of the DBT implementation, leakages have come down and it has helped government of India improve its financial status. Look at the statements here. Statement 1 is correct. Statement 2 is correct. In fact, statement 2 is explaining statement 1. Statement 3 is incorrect. So question number 3, right option. Question number 3, right option is option C. Only one of the statement 2 and 3 is correct and that explains a statement 1. Let's move on now. Right, question number 4. Consider the following statements regarding SASCI. What is the importance of this particular initiative? There is a box which has been provided in the economic survey. It stands for Special Assistance to States for Capital Expenditure or Investment. This was announced by the Government of India during the period of pandemic, that is in October 2020. Under this, the objective was very simple. The states would be provided 50-year interest-free loans. 50-year interest-free loans. And the states would utilize this money to invest in capital expenditure. Right? So initially it was introduced with a small amount. Over a period of time, the government of India in the subsequent budgets has kept on revising the number upwards, increasing the allocation. And for the current financial year, that is 26 and 27, the government of India has allocated 2 lakh crore rupees. It has allocated 2 lakh crore rupees for this particular scheme. It was introduced in October 2020. Yes. Under this, center provides 50-year interest-free loans to the states for capex. Yes. The allocation in the budget for financial year 27 is 2 lakh crores. Yes. Question number 4. All the 3 statements are correct. Right option will be option C. Question number 5 now. Consider the following statements regarding cross-subsidization. What is the basic idea? There are 2 statements which have been provided in the context of railways. In railways, the government of India will impose and collect charges. It is a departmental undertaking. If you're traveling in the railways, you will have to pay money. But please understand, when you travel, let's say in a general class, the government will impose very less charges. Whereas, if the freight transportation is done, the government will charge very high. This is the basic idea of cross-subsidization. Government will provide a good or service to 2 different buyers or consumers. For one, the charges will be much higher, and for the other, charges will be much lower than the actual charges. This is done in order to ensure that the second class of consumers for whom the charges are very less, they will not feel the pain of paying higher amount of money. That is poor people who are traveling in railways, poor households or middle class households which are purchasing electricity, etc. So according to the economic survey, around 68% of the total revenues generated, gross revenues generated or gross traffic receipts generated by the railways come from the receipts through freight. So the government imposes and collects more amount of money through freight and collects a lesser amount of money by charging lesser from the passengers. But this creates a problem. It leads to inefficiency. It will lead to lower overall revenue collection for the railways. It will also make the railway transportation for the freight very, very costly, etc. So first statement, freight revenues for the railways is over 90% of the total revenue. Incorrect. Higher cross-subsidization in railways will distort competition with road, inflate commodity prices and increase logistic cost. Yes. So question number 5, statement 1 is incorrect, but statement 2 is correct. Option D is the right one. Question number 6, and those who are wondering, sir, should I read all of it? My suggestion, please do. Download the PPT from my Telegram channel, and a couple of days before the exams, please go through the PPT, especially the screenshots that I've given from the budget documents as well as economic survey document. Consider the following statements regarding SNA-SPARSH. SNA-SPARSH basically stands for Single Nodal Account Samyochit Pranali Ekikrit Shigra Hastantaran. This is the full form of SNA-SPARSH. But what is the meaning of it? The SNA-SPARSH effectively has been implemented by the government of India, covering the centrally sponsored schemes. The basic idea is this. The government of India earlier, after the announcement of the budget, would transfer the money to the state governments. Of course, for the implementation of, let's say, schemes. This money would be transferred into the account of the state government, and this money would simply sit idle. And on the other hand, central government, because it has already transferred the money, it doesn't have money for other projects, center would borrow money and pay interest. So on one side, money is sitting idle, and on the other side, center is forced to borrow. In order to address this particular problem, the government of India introduced concept of just in time, that is SNA-SPARSH model. Under this, there is a mechanism. The states will not be allocated money, right? This money will be allocated only and only when the expenditure needs to be incurred. By implementing this particular process, that is under the JIT SNA-SPARSH, the government of India has made the process much more efficient. Right? So it has integrated IFMIS, eKuber and PFMS. Yes, the statement is true. The PFMS, IFMIS, these are the different types of systems. For example, PFMS stands for Public Financial Management System. Right? So first statement is correct. It is just-in-time fund management system for centrally sponsored scheme. Yes, both the statements are true. Right option for question number 6 will be option C. Question number 7 now. Consider the following statements. Share of direct taxes in total taxes has increased from 51.9% in the pre-pandemic to 55.5% in the post-pandemic. This improvement has been supported by a steady expansion of the tax base. In fact, both the statements are true. This is the data given in the economic survey. Before the pandemic and after the pandemic, what has been one of the important outcomes? The amount of taxes collected by the government has increased. The tax base also has widened. Look at the data that has been provided. Financial year 22, 6.9 crore income tax returns have been filed. In the financial year 25, 9.2 crore income tax returns have been filed. Right, the share of direct taxes out of the total taxes also has increased. Pre-pandemic it was 51.9%. Post-pandemic it is 55.5% for the financial year. Right, for the financial year 25, it is further estimated to be much higher, that is at 58.8%. So the tax base has widened. This has resulted in collection of higher and higher direct taxes. Right? So look at the two statements now. Right? So statement 1 and statement 2. Question number 7, statement 1 and statement 2. If you look at it, both of the statements are true. Right? So statement 2 explains statement 1. So right option for the question number 7 will be option A. Question number 8. Which of the following publishes the survey on remittances in India? Is it RBI, Ministry of External Affairs, Ministry of Labor, or none of the above? Right option for the question number 8 is the Reserve Bank of India. According to the 6th round of the survey on remittances for India for the financial year 24, which has been published by RBI, it has given certain important details. It has stated that 1, the remittances that India has received has increased. But in addition to this, from where we are receiving the remittances, there is a change in the composition of that. Traditionally or historically, the amount of remittances that we received came from Gulf Cooperation Council, and it was generally the United Arab Emirates which contributed to the highest amount of remittances to India. But according to this report published by RBI, USA is the top contributor of remittances now, which is around 27.7%, followed by UAE, which is 19.2%. Right? So from the Gulf Cooperation Council, now the remittances that we are receiving from the advanced economies has started increasing. Right? So right option for question number 8 is option A. Question number 9 now. Consider the following statements. Statement 1. The value of Forex reserves held by RBI have increased. One of the factors that has contributed is gold. The value of gold has increased on account of valuation gains, increased preference for gold by the central bank. Both the statements are true, by the way, and statement 2 explains statement 1. Option is A. Let me explain. Please have a look at this particular graphical representation. It provides information regarding the value of Forex reserves held by Reserve Bank of India. If you just observe from 2023 to 2026, you will see that the value of Forex reserves has kept on climbing upwards. And the most important component within the Forex reserves, most important component has been this, that is a foreign currency asset. Highest foreign currency asset and the lowest is the reserve position at IMF, or reserve position or gold reserve in the IMF. Right, so highest is FCA. But in addition to this, the question is on gold. Please observe what has happened to the length of the bar that represents gold. It has kept on increasing. So one of the reasons why Forex reserves has increased is because of gold. But why the gold value why this gold contribution to the Forex reserves has increased? Because RBI, just like many central banks, has been purchasing more and more gold because of uncertainty as well as high inflation. In addition to this, when the price of the gold increases, the value of the gold that you are already storing will also automatically increase. So these are the two reasons why the gold value or the gold under the Forex reserves has increased, which has contributed to rise in the Forex reserves. So right option for question number 9 is option A. Question number 10 now. Consider the following statements regarding services sector in India. India is the world's 7th largest exporter of services. This is straightforward statements taken from one of the chapters under economic survey. All the 3 statements are correct, by the way. Let me give you the data here. India's services sector accounts for more than 50% of gross value addition as well as GDP. When you look at the amount of FDI that has flown into India, services sector has accounted for more than 50% of the global FDI. It continues to be the largest recipient of FDI. India is the 7th largest exporter of the services in the global market. As a part of the global trade, India's service exports account for 4.3% of the global trade. Now, when you look at all of these particular statements and look at the statements given in the question number 10, you will realize that all the three statements are correct. Right option is option C, all the three. Let's move on to the question number 11 now. Consider the following statements regarding minimum alternate tax or MAT. MAT as a concept has been there in your static portion as well. But the government of India, that is specifically the finance minister, has made certain changes in the application of MAT. Minimum alternate tax was implemented. It is old tax, by the way, right? More than 3 decades now. It was initially introduced as a minimum corporate tax, later renamed as minimum alternate tax. It has been implemented to target certain companies which made book profits but used multiple exemptions, ended up paying zero taxes to the government. These were technically called as zero tax companies. Until recently, these particular companies would end up paying 15% MAT, 15% minimum alternate tax. From the current financial year, this number has been changed, reduced to 14% minimum alternate tax. And not just this, there is also change in how you are going to use the MAT credits going forward. So it is a direct tax? Yes. It is targeting zero tax companies? Yes. It is provided under section 206 of the Income Tax Act of 2025. Now listen to me carefully. A lot of you will simply say incorrect because you have memorized section 115JB. This particular section is from the Income Tax Act of 1961. But the government of India very recently has introduced Income Tax Act of 2025. And the section 2061 of Income Tax Act of 2025 provides for minimum alternate tax. So third statement is also true. Right option for the question will be option C. Question number 12 now. Consider the following statements regarding debt to GDP ratio. Two statements are there. Central government has a target of 50% plus or minus 1% debt to GDP ratio target by financial year 31. The government is using the debt to GDP ratio as a fiscal anchor. Now listen to me carefully. According to the original Fiscal Responsibility and Budget Management Act, the focus was reducing revenue deficit and fiscal deficit. There was FRBM review committee set up, which was headed by Mr. N.K. Singh. And this committee recommended that rather than focusing on the reduction of only RD and FD, we should focus on the reduction of debt to GDP ratio. The target that was given by the committee was overall 60%, of which 40% target is for the center, 20% target is for the states. The government of India, starting from this financial year, has introduced or has taken up the debt to GDP ratio as the fiscal anchor instead of FD. What does it actually mean? Going forward, the decision making, policy making will be surrounding or will be focused on the debt to GDP ratio. Right? So first statement or this particular statement, yes. Second statement is correct. Central government has it set a target of 50% by financial year 31 with a flexibility of 1% on either side? Yes, that is also true. So question number 12, right option will be option C, both. And this is my suggestion. Please go through these particular graphs. I've given you graphs from the budget documents, giving you information regarding the capital expenditure, the composition of transfer which is done from the center to the states, the fiscal deficit as well as the debt to GDP ratio target. For the financial year 27, that is for the current financial year, the budget estimate, the target is 55.6%. But when you talk about the debt to GDP ratio, what does it comprise? Please look at this particular table. Right? According to the budget documents, the debt of the union government will comprise external debt. It will comprise NSSF borrowings are done from by the center. It will comprise public account liabilities. It will also comprise extra budgetary receipts, etc. All of this information has been provided in this particular table. Please go through this. So question number 12. Question number 12, option C is the right one. Let's move on to the question number 13 now. The budget 26-27 has proposed to set up rare earth corridor in which of the following states? Odisha, Karnataka, Kerala, Andhra Pradesh, Tamil Nadu. Which of the states? The finance minister made an announcement in the budget. A corridor that is basically ensuring the supply chain procedures will be promoted in the following states. 4 states have been identified. That is for rare earth promotion: Odisha, Kerala, Andhra Pradesh, and Tamil Nadu. Right? So Karnataka is not part of this particular corridor. 1, 3, 4, and 5. Right option will be option B. Question number 13, option B is the right one. Let's move on to the next one. Question number 14. Please make a correction here. Okay, question number 14. Consider the following statements regarding the capital goods. The capital goods policy is implemented by Ministry of Heavy Industries. The government of India back in the year 2016 announced a capital goods policy. It was done in order to promote the production of capital goods in the domestic market. This was there very recently in the newspaper, and this is being promoted by Ministry of Heavy Industries. First statement is correct. The capital goods accounts for around 2% of GDP. This is also correct, by the way. The overall capital goods production out of the GDP comes at somewhere around more than 10%. And when you convert that in terms of the GDP number, right, instead of looking at only manufacturing, when you convert this into GDP number, it comes to somewhere around 2% of GDP. All the capital goods imported are exempted. All of them are exempted. Obviously, right, the statement will be incorrect. And why I have given you a question associated with this? The government of India in the budget announcement provided exemption to some of the capital goods imports, continued the exemption for some of the capital goods imports. That is the reason I've given you this particular question. So question number 14, 1 and 2 are correct. Right option will be option B. Question number 15 now. And this is where I wanted to say earlier, I said make a correction. The correction is here. So question number 15, there are 3 statements, right? The option will be only one of the 3 statements are correct. Only 2 of the 3 statements are correct. All 3 of the statements are correct, or none of the statements are correct. Let's start now. Consider the following statements regarding Samarth scheme. The nodal ministry for this is Ministry of Textiles. It is a demand-driven initiative. The aim is to promote skill development in both organized as well as unorganized segment. This was announced, or the announcement associated with the Samarth scheme was there in the budget. Now listen to me very carefully. The nodal ministry is Ministry of Textiles. Samarth expansion is scheme for capacity building in textiles sector. It is a demand-driven and placement-oriented skilling initiative. In simple terms, what kind of skill sets are required in the labor market, which are demanded by the companies? Those kind of skill sets are provided. Demand-driven initiative. Yes, right. So look at the statements in question number 15 now. First one is correct. Second one is correct. And it will focus on organized as well as unorganized. Yes. For example, in handicrafts, a lot of production comes from unorganized. So it covers even unorganized. So question number 15, all the 3 statements are correct. Right option is option C. Let's move on now. Question number 16. Consider the following statements regarding PM MITRA. The government of India has announced a PM MITRA, and very recently, that is in the last year, it was also there in the newspaper because the Prime Minister laid the foundation stone for the first PM MITRA textile park. The textile parks under this will completely be owned by the center. I've made a question on this because it was there in the budget discussion. Please look at the important points. The Finance Minister has set up mega textile parks in the challenge mode. They can focus on bringing value addition to the technical textiles. So in that particular context, PM MITRA initiative was mentioned. So these are the 7 places where the 7 parks have been proposed. It will be implemented by the Ministry of Textiles, will be implemented from financial year 22, financial year 28. Under this, an SPV will be set up which will be owning the textile park. It will not be completely be owned by the center. 49% will be owned by the center and 51% will be owned by the states. Right? Under this, there are multiple types of incentive schemes. One is the financial assistance. Please have a look at it, where 800 crore per park for greenfield projects and 500 crore for brownfield projects will be provided. So both greenfield as well as brownfield, both of them will be covered. All right. The further breakdown is development capital support and competitiveness incentive support. Now let's look at the statements given in the question. The textile parks under this will be completely owned by the center. Incorrect. It will be owned by an SPV. 49% of SPV is with the center. Under this, the only assistance provided is in the form of a development capital support. No, that is also incorrect. Under this, the greenfield or brownfield projects are covered. Yes, third statement is correct. Question number 16, option A is the right one. Question number 17 now. Consider the following statements regarding government e-marketplace. In the budget, the government made announcements associated with the TReDS platform, Trade Receivables e-discounting system, which is promoted by Reserve Bank of India. There was one announcement that combined both GEM as well as TReDS. Please have a look at this. Link GEM with TReDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. So I've made a question on GEM here. Government e-marketplace. It is basically a platform that has been developed where all the procurements that are done by the central government, departments, etc., all of this has to be done through this particular portal itself. It has been done in order to ensure procurement will be transparent. There will be no corruption in the system. Efficiency of the procurement is going to increase, etc. Right? So state governments are prohibited from using GEM. No, state governments are in fact promoted to procure from GEM. First one is incorrect. The government only procures goods and not services through GEM. Incorrect. Government will procure goods as well as services. GEM was set up as 100% government owned Section 8 company. Yes, this is true in fact. Okay. So question number 17, right option is option A. Only the third statement is correct. Now in addition to this, please go through this particular table. Right. This is a screenshot of multiple other announcements which the finance minister has done covering the TReDS platform. So question number 18 now. Consider the following statements regarding REIT, Real Estate Investment Trust. This is a new type of an investment model which is regulated by SEBI but is being promoted by the government of India now. Right? For example, in recent times itself, different types of investment trusts have been set up by entities under the government of India. Right? So these must invest 100% of their funds in the completed projects. REITs are listed on the stock exchanges. At least 51% of the units must be held by the sponsors. Before solving this, why it was mentioned in the budget? The government of India, that is the finance minister, has stated that there are certain real estate assets which are held by the central public sector enterprises. They want to accelerate recycling of these particular projects by setting up dedicated REITs. This was the announcement. Let's get back to the question statements here. These must invest 100% of their funds in the completed projects. It is incorrect. 80 and 20. 20 ongoing, 80 completed. REITs are listed on the stock exchanges. Yes. At least 51% of the units must be held by the sponsors. Incorrect. It is 15%. Of the three statements, only the second is correct. Right option for the question number 18 will be option C. Question number 19 now. Consider the following statements regarding national waterways. The waterways have been there in the discussion, but there was a specific announcement done by the finance minister in the budget covering waterways. The announcement was 20 new waterways over the next 5 years will be operationalized, but specifically one waterway was pointed out. National Waterway 5, NW5. Government of India, listen to me carefully, back in the year 2016, with the passage of National Waterway Act, has notified a total of 100 waterways as national waterways. 5 existing, 106 new. The most important waterway in terms of length is National Waterway 1. The length is 1620 kilometers, and the rivers which are involved, this is the list. And the National Waterway one passes through these particular states. Please remember. And the one which has been mentioned in the budget by the Finance Minister, National Waterway 5, it has a length of 265 kilometers. These are the rivers and it passes through Odisha and West Bengal. Please make a note of all of this, can be questioned in the preliminary examination. In addition to this, the National Waterway was also mentioned in terms of promoting Coastal Cargo Promotion Scheme. What is this? The government of India wants more and more freight transportation to be done using waterways. But it is very difficult for, right, let's say the government to shift the users from roadways, which is comparatively cheaper right now, to waterways. So what is the government of India doing? Announcing an incentive scheme. But is there already an incentive scheme which was announced earlier, which covered certain key roads? The government of India, please remember this, back in the year 2024, announced Jal Vahak scheme. Under the Jal Vahak scheme, the government of India allocated 95 crore rupees and the components were financial incentives as well as scheduled services. So please remember, there was a scheme and now one more scheme has been announced by the government. Let's get back to question number 19 statements. The government has notified 111 waterways as national waterways. Yes, that is true. NW1 is the longest waterway. Yes, that is also true. NW5 passes through Odisha and West Bengal. Please have a look at this. Odisha and West Bengal. Yes, that is also true. So all the three statements are correct. Right option for question number 19 will be option C. Question number 20 now. Consider the following statements. REC and PFC are both government-owned NBFCs. Both are Maharatna companies. Both are government companies under the Companies Act. This, in fact, that is the rationalization exercise in the context of the Rural Electrification Corporation and the Power Finance Corporation was tried out earlier as well. But now, again, the government of India has made an announcement in the budget. In order to basically, implement the vision of NBFCs for Viksit Bharat, the government of India in the budget has announced restructuring of PFC as well as REC. Right, this has been announced and the question is associated with PFC and REC. First statement, both are government-owned NBFCs? Yes. Both are Maharatna companies? Yes. Both are government companies under the Companies Act? Yes. Of course, the ownership is slightly different. Please have a look at the ownership, the percentage of ownership, etc. Both are government companies under the Companies Act? Yes. That is basically whenever you look at the government ownership in different entities, government can own this, right, as a part of its undertaking. For example, railways. Government can own this as a type of a statutory corporation. Example is FCI and NABFID. Government can also own this while setting this up as a company. Right? For example, Coal India Limited or for that matter these. Right? So both are government companies under the Companies Act. Yes. All the three statements are correct. Right option is option C. So question number 20, option C is the right one. Question number 21. Consider the following statements regarding municipal bonds. The government of India in the budget has made an announcement. Please have a look at the table here. To encourage issuance of the municipal bonds, the government of India has proposed an incentive of 100 crore rupees for single bond issuance of more than 1000 crore rupees. Already there is a scheme, Amrit scheme. Under this, there is a component of incentivizing, right, the issuance of municipal bonds. What is the basic idea for municipal bonds? These are the debt instruments which are issued by the municipalities where the borrowing is done and the money will be used for certain purposes. So the government of India now has announced for large bond issuance, incentives would be provided by the center. All the issues of municipal bonds are done through public issue, no compulsion. It can be public issue, it can be private issue. First statement incorrect. These bonds offer same coupon rate as the union government bonds. Obviously no, because the government of India is more credible. The safety associated with the government bonds is much higher compared to municipal bonds. Right? So municipal bonds will give you more rate of interest, more coupon rate compared to government of India bonds. Second one is incorrect. The municipal bonds may also be green bonds. Yes. Yes. Possibility is there. In fact, examples are also there. So, right option for the question number 21 is option A. Question number 22, or before going to question number 22, please go through the criteria that the municipality has to meet in order to issue municipal bonds. They will have to have positive net worth. They should not have defaulted on the interest or the principal repayment of earlier debt issuance. Right? There are criteria they will have to meet. Only and only then they are allowed to issue municipality bonds. Question number 22 now. Consider the following statements regarding portfolio investment scheme, PIS. There was an announcement done by the finance minister in the budget. Please have a look at the announcement. Individual persons residents outside India, PROI. For example, overseas citizens of India. Non-resident Indians will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. What's the basic idea? The OCIs, NRIs, they are allowed to invest in equity of listed companies in India. This is a scheme PIS. It is under the Reserve Bank of India. And what has the finance minister done? Certain relaxations has been provided in terms of limits. Have a look at this. Increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all the individual PROIs to 24% from current 10%. In a nutshell, they can invest more with these relaxations announced by the government. Right? So come back to the question statements. It is regulated by Reserve Bank of India. Yes, that is true. It is available only for the NRIs. This is incorrect. It is available for PROIs. NRI, OCI, all of them are eligible. Second one is incorrect. Under the scheme, the investors do not have any investment limit. This is incorrect. Only the first statement is correct. Question number 22, right option is option A. Question number 23 now. Consider the following statements regarding security transaction tax, STT. The government of India, that is in the budget announcement, has made certain changes to the STT that is applicable on the transactions in the futures and options market. They have in fact increased the rate. So based on this, I've given a question here. It is a direct tax imposed and collected by the central government. Yes, that is true. It is implemented only on the value gained on the securities by the securities. This is incorrect. Because if you impose a tax on the value gained, that will become capital gains, not the security transaction tax. It was introduced through Finance Act of 2004. Yes. 1 and 3 are correct. Right option for the question number 23 is option B. Two more questions by the way. Question number 24. And before I start with 24, how many of you have been able to solve most of the questions, if not all? If you have been able to solve more than, let's say, 75 to 80% of the questions that I've discussed so far, your preparation is on the right track. And those who are worried, please don't panic. Download the PPT and 1 or 2 days before the examination, quickly glance through these particular important points. Consider the following statements regarding share buyback tax. What is the basic idea? The company has issued shares. It could be a listed company or unlisted. Right? And when I say listed, you will purchase the shares from the stock market. If it is unlisted, right, these shares are held privately. That is within certain group of investors. So when the company will purchase the shares back, it will pay certain money. On this money, the government will impose a tax, that is share buyback tax. The government of India now has basically made a change regarding how the share buyback tax will be imposed and collected. The finance minister has stated that all the types of shareholders, right, basically will now, right, come under, right, the buyback tax, that is by treating this particular buyback as capital gains. By treating this as a capital gains. Until now, it was treated as a dividend and accordingly the tax was imposed. Now, from this financial year, the share buyback that will be treated in the form of a capital gains, and the capital gains tax will be imposed and collected irrespective of whether you are normal equity shareholder or you are a promoter shareholder. If you're a promoter, in fact, the government of India has proposed higher level of taxes, additional taxes in excess of the capital gains tax. Now, let's look at the statements here. This is applicable in case of listed and unlisted companies. Yes. The tax is payable as a direct tax. Yes, that is also true. It is applicable only for the non-promoter shareholders. This is incorrect. Promoter, non-promoter, doesn't matter. The share buyback tax is applicable to both. So question number 24, right option is option B. Only two of the three statements are correct. And last question in the session now. Which of the following are the schemes under Indian Semiconductor Mission, ISM? The government of India, that is the finance minister in the budget, has made certain announcement regarding ISM. Semiconductor Fab Scheme, Display Fab Scheme, DLI Scheme. Right option, by the way, for the question is option D, 1, 2 and 3. Look at the important points associated with the ISM. It was launched in 2021. The nodal ministry is MITRA, that is Ministry of Electronics and Information Technology. It is being implemented for a tenure of 6 years, and these are the three components of ISM: Semiconductor Fab Scheme, Display Fab Scheme, and DLI. So based on this, the right option for the question number 25 and the final question is option D, 1, 2 and 3. So these are the 25 important questions from the two important documents, budget and economic survey. If you have liked the discussion, do not forget to hit the like button. If you're yet to join the Unacademy IAS YouTube channel, kindly do it right now. Thank you. Have a great day.